Hello everyone. In this video, we are from Group 2. We will present our discussion about measurement theory. This is the members of Group 2. The first topic is about the importance of measurement. Campbell defined measurement as the assignment of numerals to represent properties of material systems other than numbers, but Stephen referred measurement as the assignment of numerals to objects or events according to the rules. Campbell makes a distinction between the systems and the properties of the system. The system means any object with which the psychic deal would seem to include anything like pieces of wood, tables, people, assets, etc. And the properties are the specific aspect or characteristic of the system, such as weight of the object, length, width, prices, quantities, etc. We always measure properties and not the system, so in this respect, Campbell's definition is more precise than Stephen's definition. Measurement is very important to do because by measuring, we can know the value of an object so that it can be a reference to determine what kind of policies related to the object. Accounting is formally defined as a system for providing quantitative information primarily in nature about economic entities, and that is intended to be useful in making economic decisions. Larson said that accounting is art of measuring and communicating financial information, so measurement is a part of accounting. Measurements are made because when we use quantitative data, it will provide us more information than qualitative data in accounting. Measurement also can be very dangerous because it can be used by managers to conduct opportunistic behavior. Measurement involves linking the formal number system to some property of objects or event by means of semantic rules. Semantic rules in accounting are represented by transactions in the market and the allocation of the use of capital resources against incoming revenue over the period. The second topic is about scales. Every measurement is made on a scale. The scale shows what information the number represents and giving meaning to every number. Scales created when a semantic rule is used to relate the mathematical statement to object or events. According to Stevens, scale can be described in general terms as nominal scale, ordinal scale, interval, or ratio. The first scale is nominal scale, which numbers are used only as a label. Because number is only used as a label, number has no quantitative purposes and it simply represents a classification. A nominal scale itself is the most basic scale of measurement. The second one is ordinal scale, which the concept of this scale has its foundation in the concept of order. The function of this scale is to assist in the determination of greater or lesser, such as grades or rank. Next is interval, which impart more information than the ordinal scales. In accordance with the theory of hierarchy of scales, the interval scales include both of the nominal and ordinal scales. The last one is ratio scale, which conveys most information. The concept of this ratio is combination of nominal, ordinal, and interval. With addition, ratio scale has a unique origin and a natural zero point. The use of scale in accounting. In the accounting, the example of nominal scale is the classification of 5 accounting phenomena. The first one is asset, liabilities, equity, income, and expenses. The use of ordinal scale we may apply to rank investment or project or profitability of firms. Also, we can use ordinal scale in balance sheet, which we listed current assets and liabilities in the order of liquidity. Matesik mentions that standard cost accounting as one of examples where interval scale is used in accounting, but this scale have a weakness, which 0 point is arbitrarily established. The last one is ratio. The concept of ratio scale in accounting is expressed in the use of financial ratios as indicators of performances. Another example of ratio is the use of dollars to represent costs and values. The next topic is about permissible operation of scale. With ordinal and nominal scales, none of the arithmetic operation can be used. We cannot add, subtract, multiply, or divide the numbers because in nominal scale, number is just a label, and ordinal scales, which conveys limited information. Invariance of the scale means that regardless of the measure used, the measurement system will provide same general forms of the variable, and the decision maker will make the same decision. But this is not the case in accounting, because there is more than just one accounting system. The information they provide will differ, and differences decisions will be made. The next topic will represent by my friends.
Okay, thank you Lintang for the presentation. Next, I'm Angel and I'll be explaining the type of measurement. So as mentioned earlier by Lintang on the importance of measurement, there must be a rule to assign numbers before there can be a measurement. And the formulation of the rule gives rise to a scale, and therefore measurement can be made only on a scale. There are two types of measurement mentioned by Campbell, and both of these measurements can be made only if there are confirmed empirical theories that exist to support them. The first one is the fundamental measurement. A fundamental measurement is one where numbers can be assigned to the property by reference to natural laws and which doesn't depend on the measurement of any other variable. Length is one of the examples of properties that are fundamentally measurable, as it is referring to natural law, which is ruler, and it also doesn't depend on the measurement of any other variable. Numbers, volume, time, and mass are few of the other examples. The second one is the derived measurement. A derived measurement is the same with fundamental in a way that it is based on confirmed theory, but it depends on the measurement of two or more other quantities, and it also depends on the relationship between the quantities. A mathematical operation can be performed on the numbers from the derived measurement. So for instance, the measurement of profit is derived from two quantities, which is income and expense. And a mathematical operation that can be performed is by adding the income and subtract the expense. The last type of measurement is mentioned by Torgerson, and it is the fiat measurement. So in contrast to measurement listed by Campbell, the fiat measurement is not based on confirmed theory. Instead, it is based on arbitrary definition. What does it mean by arbitrary? So it means that it is based on individual discretion rather than fair application of the law. For example, in a court, we find some cases are decided by a judge or arbiter rather than by a law. And in accounting, it is typical to use an arbitrary established definition to relate certain observable properties or variables to a given concept without having a confirmed theory to support this relationship. Torgerson also argues if Campbell's type of measurement is based on confirmed theory, then the measurement of profit should not be considered as one, since you can measure profit directly, but instead you assume that it comes from income minus expense. The major problem that might arise from the fiat measurement is that there are numerous ways in which the scales can be constructed, and therefore the confidence level in the result might be low. Generally, to validate a measurement, social scientists attempt to relate the property under study to other variables. So for example, to measure people's arithmetical ability, we make people sit on arithmetic tests, and then we assume our test is valid if there is high positive correlation between scores on the test and the grades that they receive at the school. So the fiat measurement is more like an alternative or addition to the fundamental and derived measurement, as Torgerson argues that it is more relevant to the social science. Next is about reliability and accuracy. But before we jump further into reliability and accuracy, we all should know that there are no measurement that is free from error, except for accounting. The sources of error, which are not mutually exclusive, include the following. The first source is measurement operations stated imprecisely. So when a set of operations is not stated precisely, it may be interpreted incorrectly by the measure. For instance, the calculation of profit involves numerous operations, which sometimes interpreted differently by different accountants. Like cost of repair, some accountants classify it as expenses, but others capitalize it. The second source is the measure itself. So a measurer may misinterpret the rule, or be biased, or read the instrument incorrectly. For example, a manager who has certain biases to increases the profit recorded in the financial statement. Next is instrument. So a flow of physical instrument that used for measurement, such as ruler, thermometer, etc., can be a source of error. Environment. The setting in which the measurement operation is performed can affect the result. A bad weather condition, noises, or in accounting, we might find a pressure from management can be a source of error. Attribute unclear. What is to be measured may not be clear, especially when measurement involves a concept which can be measured directly. Suppose you want to measure the value of non-current asset. Well, is it the present value, or acquisition cost, or is it the selling price that you want to try to measure? And last but not least, risk and uncertainty. So take a look at an intangible asset. It is considered risky because the amount of return is unknown. Uncertainty is also there because we face a more relatively unknown distribution of returns. Now that we already know the sources of error, we understand that there are no measurement that is free from error. What we need to do is to establish limits of acceptable errors, and that any measurement that falls within these limits is still considered true and fair. Next is reliable measurement. So in the International Accounting Standards, number 8, paragraph 10b, it is stated that in the absence of an IFRS that specifically applies to a transaction, management should use its judgment in developing and applying an accounting policy that results in reliable information. The word reliable here refers to the proven consistency of either an operation or the results of the operation itself. So if the same result can be consistently achieved by using the same method under the same circumstances, the measurement is then considered reliable. In statistics, reliability demands reproducible and repeatable, but it also means the same thing with consistent. Reliability also pertains to the precision with which a specific property is measured. So the key takeaway here is that reliable refers to the consistency, reproducible, repeatable, and precision. The notion of reliability also incorporates two aspects, which is the accuracy and certainty of measurement, and then the representative faithfulness of disclosures. In relation to measurement in accounting, we might find the historical cost method offers a more reliable but less relevant measurement. On the other hand, the fair value method offers a more relevant but less reliable measurement. So there's always a trade-off between reliability and relevance. Now that we already understand the definition of reliable measurement, we all should know that it doesn't necessarily lead to accuracy. Like you can measure the temperature of your body many times and getting the same but inaccurate results. So when reliable means consistent, precise, accuracy on the other hand has to do with how close the measurement is to the true value of the attribute measured. More closer it is, the more accurate. So suppose measuring the length of an object, it can be done accurately by comparing the object with a standard that represents its true value, which is a ruler. Now the problem in accounting is, for many measurements, the true value is not known. If that's the case, we should remember that the objective of accounting mentions the usefulness of the information, and therefore, accuracy of measurement relates to the pragmatic notion of usefulness. For example, an asset represents its true value if it's depreciated correctly, and therefore represents its true usefulness.
Okay, now we will present about measurement in accounting. There are two fundamental measures in accounting. The first is capital and the second is profit, where capital is derived from transactions and revaluations that occur in financial markets or from the net of fair value measure of assets and liabilities. And profit can be derived from the matching of expenses with revenue or the change in capital over the period from all activities, including increases and decreases in the fair value of net assets, excluding transactions with the owner. And the measurement approach before the introduction of international accounting standards is different. Capital was always stated at historical costs, and changes in net assets were not considered as profit. Hence, we can see that derived profit depends very much on how we measure opening capital and how we measure expense and capital allocation. And then we can define these fundamental measures in various ways, such as historical cost and operating, and then financial and fair value. And next, there are two notable developments in international standards. The first is profit measurement and revenue recognition should be linked to timely recognition. And the second, the fair value approach should be adopted as the working measurement principle. And the concept of capital and profit have changed and evolved over time. The output of the changes and evolvement is there are a number of concepts of fundamental measurement, and these changes are focused more on balance sheet valuation, moving accounting away from a simple profit allocation measurement system, and placing more emphasis on relevance for commercial reality and investor decision making rather than reliability. And there is the measurement in accounting. Now we will talk about measurement issues for auditors. As we present before, there are alternative valuation methods in accounting, and the existence of this creates auditing issues. The first issues is there are shifting on the focus of profit measurement from matching revenues and expenses to assessing the changes in the fair value of net assets. The example is immediate recognition of impairment losses. And then auditors must determine whether management has made appropriate and reasonable valuations. For example, at least 12 methods of valuing intangibles. And then it is possible for management to recognize several different measurements and impairment losses as long as it is reasonable. So, if the measurement and impairment is reasonable, the difference is can be tolerable, yeah. And then as an auditor, we can accept all of these differences in valuation method if management have done these 4 of action. The first is management have applied the valuation models correctly. The second, management have used appropriate data. And the third, management have made appropriate assumption. And the last, management have acted in a consistent manner. So, if management have done these 4 act, auditor would accept all of the differences in valuation method. And there are another issues for auditors, such as pressure from managers to accept their valuations. To anticipate this pressure from managers, auditors can anticipate it in client acceptance phase before the engagement between the consultant firm and the client. And the next issues is historical cost issues, such as standard inventory costs, where the costs are precisely stated but based on assumptions about engineering process that are influenced by changing condition. So there are measurement issues for auditors. Next, application or case study. We will present about KKPK 2019 or Financial Reporting Conceptual Framework. This conceptual framework discusses the measurement basis and the advantages and disadvantages of each measurement basis. There are 5 parts of KKPK that are explained about measurement, and all of this is stated in the paragraph 6. The first part is about measurement basis that are include historical value or present value, that are including fair value, value in use, and value in exchange, and then current cost. And the second part is talk about information provided by particular measurement basis. The third is talk about factors to be considered to determine measurement basis. And there are 5 factors as a consideration for company or firm to determine what kind of measurement basis they have to choose. The first is relevance, the second is faithful representation, the third is enhancing qualitative characteristic and cost constraints, the fourth particular factors for initial measurements, and the last more than one measurement basis. And the fourth part is about acuity measurement, and the last part of this paragraph is about measurement technique based on cash flow. And there are our presentation about KKPK that are mentioned about measurement. Thank you.
Next, we'll be discussing the impact of the COVID-19 pandemic on the adoption of PSAK 68 regarding the fair value measurement. So the PSAK 68 itself defines fair value as the price that will be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at the measurement date. So if you have to sell your asset or transfer your liability today, it will be the price that you will get or the price that you have to pay today. An orderly transaction means common, usual, or in Bahasa we call it lazim. And the main thing that it is not forced. So an example of an unorderly transaction is a forced liquidation. However, as we all know, the COVID-19 pandemic has affected the volatility and volume of transactions on the Indonesia Stock Exchange. This uncertainty could significantly affect the entity's judgment in preparing their financial statement, particularly in determining the fair value of their financial instruments. This happens since the volume of transaction on the stock exchange significantly decreases, so it is not easy to determine whether a transaction is an orderly transaction or not. Understanding this issue, PSAK 68 includes a guidance in the paragraph PP44C for an entity that doesn't have sufficient information to conclude whether the transaction is orderly or not. The paragraph states that the entity cannot fully ignore observable information at the market, but the entity should give a lower weight to the market prices that occur when a transaction is deemed irregular. And if the entity concludes that it is more appropriate to use the valuation techniques, it may consider the impact of the COVID-19 pandemic to adjust variation valuation assumptions, including interest rate, credit spreads, the issuer credit risk, and so on. And if the entity chooses to use the valuation technique, they should give additional disclosure at that financial statement. There is also an additional guidance for banking sector by Otoritas Jasa Keuangan, and the banking should postpone the valuation, which refers to the market price for governance securities, including the securities issued by Bank Indonesia, for 6 months. And during the postponed period, banks may use the quoted price at the end of the March 2020 for valuation of these securities. And then for other securities, the banking should also postpone the valuations, which refers to the market price, as long as the banking system believes that the performance of the issuer is considered good. But if the issuer's performance is poor, then the bank can conduct an assessment based on its own model using various assumptions, including the interest rates, credit spreads, again the issuer's credit risk, and many others. And lastly, banks also should conduct a disclosure at their financial statement.
We choose PT Asabri as a case study because in 2019, the Audit Board of Finance found that PT Asabri recorded a comprehensive loss of 8.42 trillion rupiah based on the audit report on the central government financial report in 2019. The Audit Board of Finance said that the comprehensive losses occurred because there was a decrease in the value of stock and mutual fund assets originating from the old age benefit programs, work accident insurance, and life insurance managed by Asabri. As a result, the company lost money in investment activities. However, the measurement of the loss of value of investment assets has not been calculated based on the prevailing accounting policies. In 2018, public accounting firm cannot be sure of the fairness of the presentation in the value of securities of Asabri shares and mutual fund in those programs because the calculation of the fair value of the shares is using the composite stock price index. Meanwhile, the fair value of mutual fund is through net asset value. So, public accounting firm said that the calculation was incorrect because there was no active market for both stocks and mutual funds. As a result, the fairness of the presentation in the decline in the price of stock and mutual fund investment asset cannot be believed to be fair and has an impact on the fairness of the presentation of income or loss, which a component of Asabri current year profit and 2019 comprehensive income. In addition, public accounting firm said that Asabri's pension contribution accumulated investment is not measured using solvability ratio because it used pay-as-you-go scheme and defined benefit. Asabri also did not change its investment ownership in stock and mutual fund. So, the presentation of investment loss and decrease in stock and mutual fund price in 2019 used the same measurement as 2018. The measurement of the loss cannot be believed to be fair and has an impact on the fairness of the current year loss and Asabri's comprehensive loss in 2019. Furthermore, the decline in the accumulated pension contribution investment in 2019 is not accurate. As a result, there was a significant decrease in the 2019 of 7.52 trillion rupiah from 2018. Asabri is considered to be careless in placing his investment in shares and has a comprehensive loss in 2019. So the conclusion is Asabri is not using accurate and reliable measurement, and Asabri used defined benefit and pay-as-you-go scheme to measure their AIP investment and use IHSG to calculate the fair value of its shares, and those actions leading to irregularities in profit and loss statement of PT Asabri in 2019.
The last part of these presentations are the questions from our friends in another group, and here are the proposed answers related to the measurement theory.
Here are all of the sources or references that we use for this presentation. And that brings us to the end of this presentation. Remember, it is important for us to understand the principles of the measurement theory, as measurement can be very dangerous because it can be used by the manager to conduct opportunistic behavior that benefits themselves. We hope you have found this presentation useful, and our apologies if there is still any flaw in this video. Thank you for your attention.